What's going on, guys? FX Brawler here. In today's video, I want to talk about triple screen analysis, and this is very important for trading for beginners because this is basically the bread and butter of what I do on a almost daily basis. And this is how I find opportunities in various time frames, and I'll show you the process that I go through. So the triple screen analysis is based on fractals. So markets move in long-term cycles, mid-term cycles, and then short-term cycles, and then intraday noise, basically. And the way I use it, I use two different triple screens. So in this video, I'm going to go over which ones that I use. And I'll show you some examples of trades, maybe even trades that I took this week. So let's get started. The first thing I do is if I look at a pair and I want to try to find a way, am I shorting this or am I going long? Like what's the deal over here? Because if I'm going long on this, like it's been going up for a long time. So how do I know that it's going to keep going up? And otherwise, if I go short, it looks like there's a lot of potential, but it's an uptrend. So what do I do? So these are the type of questions that you have to answer by using multiple time frames, in my opinion. Anyways, that's my approach. And the first thing I do is I go on the weekly chart. And what I do is I try to trace, I look at these obvious highs and these obvious lows, and I trace lines basically between them to get the supports and resistances that historically were relevant. And see here, there was a little snap there, but doesn't really matter. So here, what we have, and this is how I decided to go long on the pound yen this week, is that I saw a triangle. So this resistance got penetrated, and then for several weeks, this accumulation pattern occurred, and then there was a snap. Basically, everybody that was long over here, not everybody, but most of them got hit on their stop loss, basically. So this is a typical trick that institutions do to traders in general. Whenever they know they want to take a long-term position somewhere, they need to have a seller on the other side of that transaction. And whether it's only one institution or 10 institutions or just a basket of people, the concept is the same. Basically, if you want prices to move a lot, you need to have some kind of event that you need to identify on the chart that tells you that, okay, so from this point on, everybody that was long got taken out, almost. Everybody that was highly leveraged anyways. And then from that point on, everybody's long now. So there's going to be some upward movement towards this, towards the highs. So these wicks over here that were acting as rejection, if they're taken out, then you have confirmation that this is going higher. So the way to play these kinds of patterns, in my view, is that once you see some type of, I'll use a rectangle. Once you see some type of pattern like this, and you see that it goes beyond it and comes back in, then you have an opportunity to get long on the trade. So earlier, when I was looking at the 1 hour chart, I didn't have a clue if this was a long or not, because I don't have a bird's eye view of what's going on the battlefield, basically. So by zooming out, now I know that we tested what was previously a resistance, which is now a support, and it got rejected aggressively over here at that now support, and came back in over there. So what I did is I went to I took a few positions during this week. So this is one of them. Let me zoom in. All right, so this is the zoomed in parts. This is where I got in. So this was the big rejection, came back in. And you see from here, it went over here. And I entered some as well over here, I think. Yeah, so just by going on the weekly and figuring out the important supports and resistances, I was able to find two opportunities to get long on this trade. So that's one example. So basically, the triple screen analysis that I want to show you here is that I used weekly. Then I went to 4 hour, and then I went to the 1 hour to actually take the trigger, the trade, to figure out what a good entry would be. So if you look at these supports over here, these were the opportunities because you knew that people were buying at these levels previously. They got stopped out, but this was an opportunity to play this range, basically, which was something like this. And you see, as it penetrates, as you have a close higher than all these wicks, then the price tries to go up. It couldn't. It came back in to get people out, and then it went on its merry way. So the first triple screen is weekly, 4 hour, and then 1 hour. And then the other one that I use is 4 hours, 1 hour, and 15 minutes. And I'll show you why. So let's go on the 4 hours. So over here, what I had traced was that I saw these highs over here that were acting as a resistance previously, and now price got beyond these highs. So I figured, okay, this is a pattern that I trade. I'll talk about it in a different video, but the point is that what I was expecting was for price to go beyond the resistance and then test it as again as a support to see if it would hold. And so based off of that, I did, I believe, 3 trades, some of which I'm still in. So I'll show you real quick. Euro, Australian. So that's the first trade. Basically, this pattern, whenever I see some kind of megaphone that's pointing downwards and price penetrates that the resistance line and goes back to the highs and gets rejected, I short it. So it doesn't have a name. You won't find it in books, but it's just my pattern, basically. So from there, price regressed basically over there. So that was my first trade. And then I reshorted. This is the 7th. There it is. So over here, I shorted again, and I shorted this again. Did 4 trades. And then over there, and now I just shorted this again. Not sure if it's there. Yeah. So off of one single long-term 4-hour chart, I was able to pull out 4 trades. One of them is still out, but I've made my money. Like, even if it reverses to my stop, I had 3 positive trades before that. So the way to look at this is you look at your 4 hours, you trace your supports, your resistances. To me, this was relevant. And then I was expecting price to revert, and I saw a pattern on a different time frame. On the 1 hour, I saw a pattern that I recognized, which was this expanding megaphone with the test. And then on the 15-minute time frame, I was then able to find a bunch of of entries. And what you do on these time frames is you can either wait for these huge candles. You can even go on the 5 minutes if you wanted to be earlier. But these bearish engulfing patterns that swallow up a bunch of candles prior to that. So these can be like, it's not a complete strategy. Like, you need to have money management. There's discipline involved. There's all kinds of other aspects of trading that you need to be able in order to trade like this, because this is like naked trading, if you want. No indicators, no machine that tells you when to buy or sell. But in my opinion, mastering the triple screen mindset for finding opportunities is probably the best place to start, and you'll probably end up there after you've tested hundreds of indicators and trading systems and all kinds of stuff, because they're all basically the same. They're all lagging, most of them, and if they're not lagging, then they readjust in the future, so you're kind of stuck. So I find that the fastest way to trade the markets is with support and resistances and just market experience, basically. So remember that the weekly 4 hour and 1 hour is one triple screen that I use. And the second one is the 4 hour, 1 hour. And then for my trigger, I look for 15 minutes or 5 minutes candles, and I look for candlestick patterns, but only at that moment. Like, I'll look at, I'll give you an example of a trade that I canceled that looked good. Let's go on the weekly. So this is a pattern that I trade often. This is a wedge that gets penetrated and then price gets back in. So I tried to go long over here, but then I went back on the 4 hour over here, and I saw these big bearish candles, and I figured, okay, this is failing, because usually what I would like to see is accumulation and then a penetration right away. Right now it's Friday, so I don't want to be stuck inside of this trade. And if you look on a different time frame, you'll see these big shooting stars where this is heavy rejection from the market, telling you that no, we're not going higher, we're staying right here, and it's right on the now resistance that was a support. So it was too risky for me to go down, so I closed the trade almost flat, like I lost maybe 10 pips. But these are the kind of things that by analyzing different time frames, you can figure out what's going on and adjust your trading and not be afraid to take a small loss if you think that you're wrong. But so yeah, that's the triple screen analysis. As you learn technical analysis, as you learn to trade supports and resistances, these will become very, very key in your arsenal to become a successful trader. So I hope you guys enjoyed. If you did, give it a like and subscribe to the channel, and I'll see you in the next video.